Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. We're going to quick market analysis where we look at what happened in the market during the day and then plan for the trade for the next day. Right, this is analysis for March 28th, Tuesday, tomorrow, 2023. Let's get to the charts. Here we have a small body candle, a reverse wick inside bar, kind of a small body decisiveness. That's what the candlesticks are saying. That's Nifty, that is from the Banknifty. Similarly, we have a very small body candle indicating decisiveness, kind of a doji. It's a reversal wick candle, it's a long wick and a small body. Inverted hammer reversal wick, or whatever they call it. It shows the selling pressure from the top. And again, inside bar, because the candle body is inside the previous candle's body. So, inside bars indicate consolidation. Small body indicate indecisiveness. Reversal indicate the potential for a reversal on the upside, opposite to the current trend of the downtrend. The momentum has climbed up. There is a range shift that you can see, which is a concept which is bullish in nature. If you're not aware, just check the blind list on the technical analysis playlist section. You can see that. And that's on the Banknifty. You have a bullish divergence, which is walking confirmed, and then that's why you have seen the spike up above. So momentum divergence on the short-term charts and range shift from bullish momentum up move can come in on the indices respectively. Right. So let's just summarize what's in favor of the bears. So we have an inside bar. It's not a bullish, although they just stalled on the bearishness, but it's definitely not bullish. So I put it here. So it's kind of an indecisiveness. It's a big fight between the bulls and the bears when a small body or a doji indecisive candle happens, and then consolidation happens, because of the selling pressure at the top end. And finally, you can call that candle with a small percent of the wick on the downside and a long wick on the top side. So that's an inverted hammer or a reversal wick pattern, which could give hope for the bulls actually, but overall it's indecisive. So that's what is make out, and we have a flat close in spite the attempt of 1% up more intraday. It failed and gave up everything. So it was highly volatile, and then inverted V-shape move is what happened. So smaller than indices. Finally rendered flat green, but for the namesake, 0.10 flat close in the Banknifty and 0.24 in the Nifty. So it could not hold on to the 17K, although the opponent was still at the highest at 17K for the coming expiry week. It's a truncated week. That's on Wednesday. Nifty still could not come anywhere closer to the 200 EMA, but 90 meters. That's so. Just remember that we're in a downtrend move. It's in 11 to 12.5% of the indices correction has happened. So Bollinger Band still has not consolidated, although inside bar pause or consolidation is shown in the candlestick pattern. Bollinger Band is still in the bearish mode. Momentum is still bearish in the Nifty, at least. Nifty managed to be on the edge of the sideways. Trend indicator to ADX also is in the negative, so strength of that is rising up. Overall, both of them are having a lower high, lower low pattern, which is bearish in nature from the price action. This is on the short-term charts. On the high time frames, we still have the high, low, and high pattern that is bullish. It's not reached it. So low time frames are they talking about. Visualizes the selling pressure. It's attempting to move up in some green scene, but last week some green scene, but it's still having after the Fed interest volatility. Things have not improved much. Although it's still at the top of the descending wedge. The price got increasingly selling the entire March. They were selling in today also 890 crores of selling, although 1,500 or some for buyers and from the downstream institution levels. Fyers turned back in the buying goals in the markets will climb back. Right? And except the farm and the FMCG, all the major sectors are bearish in nature basically. So the momentum short-term towards 30. Right? No. So just ignore the last sentence of all sectors close, right? All sectors basically close. That's a mistake that I left out of the previous day's slide, basically. So just ignore it. But otherwise, all the sectors are flat, it's close, and all major sectors are still bearish, except there's just a pharma and the FMCG is managed to hold. So we still make 82.43 is it, right? So that's not that great. And you have India VIX, which is not cooled off despite the fact that we have got this high VIX moment that's happening 15.4 4-5 is not that low wicks. It's no longer the low wicks, right? So those are the things. You can see that market is clearly bearish from all of these factors. If you come to a conclusion, that's what it shows. Look at what's in favor of the bulls. We are at a very crucial support down below close by in the case of Nifty, and then the bulls could try to defend that zones, and then that's we're talking about the 17,750, 7650, that zones, which is a confluence of multiple support zones, support indicators, it's Fibonacci and previous swing lows and gap supports and everything is there. So bulls may try to defend, so there's all for a bull rally that could come in from that place. That's a fact. Momentum has climbed up today. If you see the bullish divergence or the and the range shift seem to be working. Now, if it survived 200 DMA also, it has breached it earlier the day. And weekly charts, remember that we still not breached the 650, 750, which is so we're still in the higher low pattern. The medium term charts that can be also give hopes to the bulls. Crude oil is still less than 68 or 69. I did not check exactly, but yeah, below 70 for sure. So that's also a good thing. So Banknifty is sideways momentum, and so in shift is there from the perspective which will work out and take it. It has actually climbed back to and push into the sideways momentum. So there's bullish divergence on the Nifty since yesterday and seems to have moved out today. So except the IT stops in fiat, only the IT is not recovered, otherwise all the heavyweights are climbing back to the sideways out of the 7 critic major heavyweight stocks if you see. Reliance also climbed back, did well today, 1% move, and then climbed back to the sideways. So in a nutshell, the market today attempted to move up, but it fell into selling pressure, but we haven't got it. It was consolidating, attempted to break out, followed this, and gave up everything. 1% up move, 1% down. Right? That's kind of move. So and finally, if you see the candle is well inside the major previous candle, which is bearish in nature. So it's a pause. It's a consolidation, beginning of a consolidation, you can say, right? After an intense bearishness that happened in the last 2 weeks, 2 or 3 weeks or more. Right? It's a pause, you can say. So there is a pause as well, intensiveness element also to it, right? Because the VIX is not cooling off itself. Worry if it's not stopping the selling, that's again a worry. And all other indicators, in addition to the VIX and indecisiveness, candlestick patterns, momentum, all these, in spite of. In addition to that, we have all the major indicators of the moment. The trend will tell still stays at bearish overall. It's very clear that we are doing a lower high. Down move is what is happening in the shorter charts. So bubble marks is also in under a shedding pressure, and then some relief rally could summon the support zone definitely. So all that we can do is look at the levels, probability of resistance supports. So that's not a down here, 7250, 7500, Nifty 40,000, 41,000. On the upside, if at all, we can. It has to breach the lower high pattern on the short term basically. So if it can happen if there is a major, it can break out from there, and then if the major trigger is there, it will happen. Otherwise, you need to keep close of the 650, 750 zone, which is quite a confluence of multiple supports. Magnitude similarly 37, 36, which is quite 2000 points for me. But 2000 points is nothing for the magnitude when the crash happens. So let me aware of that. So in a nutshell, it's still bearish. The view is still bearish. But today's pause could lead to a stop to the severe crash. Severe the 12% correction that happens so fast. That may turn to a consolidation for some time before it decides whether to go up or down. Right. So that's a pause period of consolidation. Beginning is what happened today probably, which what I would have seen. Right. So we know where we have to watch out in the levels. That's what we can do. And then trust is the VIX is spiking up above the 20. Like this, if it moves and spikes above 20, just stay out of the trade or cut short your portion size. Right. Manage your risk and manage your productive capital. Right. And always have hedge portions where you define the risk and know exactly what you're losing in case everything falls against you. You'll still be in the game for another try based on the past learnings, but the capital is wiped out, you cannot be in the game itself. Right. So that's what I keep in mind. So that's my view. If you're not subscribed, please subscribe and share to friends and colleagues. It means a lot to us, and thanks for watching. And happy trading, happy investing, happy learning. Right? Bye.